Welcome to the Capital News. I am your host, Alex Kreitis. Today is Friday, June 5th, 2020. Thank you so much for joining me. I was away yesterday, as I noted, so we have a lot to get to today, a lot of data points. Title of today's podcast, A Jobs Report Miracle? No. So we get the market performance, yesterday's data from initial jobless claims, continuing claims, the Federal Reserve's BS, of course that means balance sheet. More stimulus from the ECB, the European Central Bank. No surprise, we talked about that Wednesday. The jobs report today, which we will read in its entirety, as I have been saying that we would here because it was likely to be historic. Now, some are deeming it a miracle. Of course, it isn't. You have to read the fine print. It doesn't come before the headline. It doesn't come before the opening paragraphs. Oh, no. You have to read the whole thing, go to the bottom to find the little caveats. The same thing that was discussed last month in April's jobs report. So it's there again. And of course, a focus to the U.S. debt clock. As I have been saying here, we're going to keep monitoring this. Earlier this week, the national debt in the United States stood at $25,720 billion. $25,720. It is now at $25,912. An increase of almost $200 billion over the course of a few days. That's more than the wealth, the net worth, not the income, the net worth of Bill Gates. It's more than the net worth of Jeff Bezos. Okay? So don't think that you can just tax these people 2% above a certain number and you're going to be able to pay for everything. You couldn't even pay for this week. And that's assuming you confiscated their entire life's work. Everything that they are worth. All right? It's basic mathematics. Understand this. Okay, headline. U.S. jobless rate falls to 13.3%. U.S. labor market unexpectedly rebounded in May as some businesses started hiring workers again. The unemployment rate dropped to 13.3% from 14.7% in April, which was the largest in records going back to 1939. Also, non-farm payrolls rose by 2.5 million, the most on record, and beating market expectations for an 8 million cut after declining by a record 20.7 million in the month of April. So the markets were anticipating a further decline of 8 million for the month of May. Oh, no. It was an increase of 2.5 million jobs. Or was it? We'll get to that. The markets absolutely love this today. The Dow Jones Industrial Average gaining 800 points, over 800 points, an increase of 3%. The S&P 500 gaining 82 points, an increase of 2.6%. NASDAQ 100, we're making all-time highs here with the NASDAQ, ladies and gentlemen, up 195 points, a gain of 2%. Another gain like this, and it'll be NASDAQ 10,000. Here we come. Japanese markets only closed up 0.74%. Of course, that's a strong gain. But they traded too early in the day, the time zone, all that stuff. So they didn't get to make out like everybody else did. But we'll see what happens on the cash trade on Monday. Across the pond, they absolutely ate it all up too. And of course, on the back of the ECB stimulus, this was just a double whammy. Double whammy across the pond. Anywhere from 2 to 4.33% gains across the pond. Australian markets were relatively flat as well. Again, that pesky time frame, but we'll see how they trade come Monday as well. Dollar continues to get whacked across the board. Could be by design. Why not? We're printing money like it's going out of style because it is, so that's reasonable. Although you still have that dollar doom loop scenario that we've discussed, and I think that will come to fruition. Everything's a process. These things don't happen overnight. It takes time. Commodities love this because, of course, everybody's back to work, or are they? So that's demand, right? Let's bid up those prices, baby. 4 and 5 percentage gains for oil. WTI trading at $38.97, a gain of over 4 percentage points today. Brent, the international metric, at $41.94, an increase of 5% on the day. Natural gas at $1.80 per million British thermal units. Gold and silver also getting whacked today. Gold trading at $1,685 per ounce, so below $1,700. And silver is back below $18 an ounce and is trading at $17.42 per ounce. Interesting with silver. Gold, you can kind of understand this. I think silver just got thrown in with it more as the precious metals aspect of it. Because, again, silver has sort of that dual function, a precious metal, backstop, perhaps a currency, but also has many industrial usage. And you would think if everybody's back to work and everybody's reopening across the planet, everything's fine. Wouldn't there be more demand for silver? So we'll see what happens. Of course, I still think any type of pullback in the precious metal space is a buying opportunity. Still in the midst of a precious metals bull market run. I do believe long term. Look, folks, it gets noisy day to day. We understand this. This is a process. It takes time. You can't continue to print this money and call it structurally sound. But that's what they're doing. But that's what we're doing. And we're going to get to that further ahead. Bonds, Uncle Sam's 10-year Treasury. 10-year Treasury note. People are selling out of them. People are selling out of them. It is now yielding 0.9%. 0.9%. Quite the move over the past few days because we've been range bound between about 0.65 to 0.7% for quite a while. 0.9% on the 10-year. This is a scenario, folks. People getting out of bonds because remember, inverse correlation between the price and the yield. They're selling them, lower price, higher yield, okay? So that's what we're witnessing here. Is everything honky-dory? Time to get back into quote-unquote risk assets? Get into those stocks at all-time highs on valuation metrics? Pretty much across the board. But worry not. Everybody jump in. All the degenerates who don't have any money to gamble because the sports aren't playing. Oh, let's open up trading accounts and let's buy up everything. Let's just buy up everything. We don't care about the valuations. We have no idea how to value a company. We have no idea how to price anything. Let's just look, see what's going on because Hertz, the same Hertz, the rental car company that we discussed here going bankrupt a week or two ago. Yes, that Hertz stock price, I believe, was up over 100% during today's trading session. People don't know what they're doing. Now, more power to you if you got lucky, but that's what you got. That's what you got. Got a whole bunch of people in this market who have no idea what they're doing to a degree that we have not seen since the dot-com bubble. And we all know how that ended. So just be careful is all I'm saying. I'm still long stocks, but I want a market that functions. That's what I want. I don't want a market that goes up for any reason at any cost. Because we still have 40-some million Americans who have lost their jobs over the past 11 weeks. I just saw an interesting survey, another one. 1 in 4 Americans are skipping meals and or are utilizing food banks. Okay? A quarter of the country. And the stock market, NASDAQ, is making all-time highs. Does that make sense? No, it doesn't. But that's the market we have. It's financial world of Oz. And just wait till people wake up to this and start connecting the dots. The sooner the better. Because we have to have some sort of semblance of a market. Because if this is just a perpetual money-making machine, then it's not a market. It's quite simple to understand this. And what concerns me here with the bond market is, of course, that's a bubble too. Because Uncle Sam's debt is junk. Nobody wants it. These yields keep going up. That's not what the Federal Reserve wants. Uh-oh, is the market getting away from the Fed? Interesting question, and isn't it? What'll happen then? If the market has its day with the Federal Reserve, can the Fed print that much money to overcome the market of nobody wanting these things except the Fed? You might not fully understand this depending on your level of expertise and understanding of economics. I try to educate this audience on this, have been doing so for over a year. So most of this audience should understand this, the importance of this situation right now. We warned about this in our book, The Cynic's Guide to Investing in 2015, that this was likely going to happen if we, as citizens, as taxpayers, or politicians, or quote-unquote leaders, if we didn't tackle these issues, then the market was going to do it for us. Is this a chink in the armor? One day doesn't make a trend, but is this the beginning of a process? So we're going to continue to monitor this. This is why I give you guys the market performance. What's going to happen? Because if interest rates start going up, which in a free market they would be, they'd be much, much higher than where they stand right now. This would be used to correct the market. This would be used to cause a whole bunch of deleveraging, which is exactly what is needed. Exactly. Otherwise, all we're doing is continuing to prop up and create zombie companies. The zombie apocalypse is already here. It's in the form of corporations. And according to the U.S. Supreme Court, corporations are people. So here it is. It's here. Now to some of the data, and then we will get to the jobs report. Initial claims from yesterday came in at 1.877 million, taking the 11-week total over 41 million. Continued claims also up for the week ending May 23rd. They now sit at 21,487,000,000 Americans. That's an increase from the last week of May 16th of 20,838,000. Okay, now we're resting at 21,487,000. That's continued jobless claims. Federal Reserve's BS, the balance sheet, up another $60 billion. Why not? Why not? Now sitting at $7 trillion. Yes, with a T. $7,165 billion. Again, a little bit of context, especially for those who may be joining for the first time. If you look at quantitative easing number 3, that was about $85 billion per month and an expansion of the Fed's balance sheet. We're now doing this at clips of 60, 80, 100, a couple $100 billion in 1 week. There's no rhyme or reason. They do what they want. There's no oversight. There's no accountability. And when Jay Powell, the chairman of the Federal Reserve, gets marched up to Washington, D.C., or is put on Skype or Zoom, they all kiss his rear end because he's printing money. And the politicians don't have to go home and say, yeah, we're going to have to raise your taxes. Nah, they don't want to do that. So we're going to be nice to you. We'll pick on Mnuchin because he's of the administration. But you, Jay Powell, saint, savior. Oh, we love you, man. You're the best. Keep printing it because we don't want to tell the truth to our constituents. God forbid. So that will continue. So this is just going to continue into no man's land. It'll be in double digits in no time. Don't worry about it. It'll be there. And remember, Jay Powell continues to tell the Congress to do more. I'm not going to tell him what to do because that wouldn't be right? Got to stay in his own lane. But do more. Because the Federal Reserve, and Jay Powell is very well aware that if they don't continue to juice this market, to juice their balance sheet, to continue with this printing press, this house of cards is coming tumbling down. Because there is no foundation. It's quite simple. Unemployment rate, again, 13.3%. So we're told that's down from the prior week of the prior month of 14.7. That's the U3, the headline number. Looking at U6, the broader measure, it is now sitting at 21.2% for the month of May. Month of April was 22.1, so down slightly. Okay? And I just want this audience to understand, I am not a perma bear. I am not pessimistic. I'm realistic. Period. End of story. That's it. I just want a market that functions. I want a constitutional republic, not a banana republic. I want free market capitalism, not a perpetual money-making machine, because all it is inflation. And when you look at it on real terms, not so great. Okay? I just want price discovery. Is that too much to ask? Because you're hurting a lot of people in the process that are now basically forced, if they want to get involved with investing, they're overpaying. They're simply overpaying. Unless, of course, they can continue this charade, this twilight zone, into perpetuity, which I just don't think is going to happen. And we outlined this last week and a half ago. Murray Rothbard's book, A Look at the Great Depression, the policies, the rhetoric, the actions, then versus today, how eerily similar, even some of the names when it comes to corporations are the same. Okay? And to the ECB, they are going to increase their stimulus to well above 1 trillion euros. No surprise to you, at least it shouldn't be. So, no man's land, Twilight Zone, Groundhog's Day, Financial Road of Oz, pick your poison, that's what we got. Okay. Bureau of Labor Statistics. The jobs report for May 2020. Total non-farm payroll employment rose by 2.5 million in May, and the unemployment rate declined to 13.3%. The U.S. Bureau of Labor Statistics reported today. These improvements in the labor market reflected a limited resumption of economic activity that had been curtailed in March and April due to the coronavirus pandemic and efforts to contain it. In May, employment rose sharply in leisure and hospitality, construction, education, and health services, and retail trade. By contrast, employment in government continued to decline sharply. That's because there's no tax revenue, so you can't afford to continue to pay these people. This news release presents statistics from 2 monthly surveys. The Household Survey measures labor force status, including unemployment, by demographic characteristics. The Establishment Survey measures non-farm employment, hours, and earnings by industry. For more information about the concepts and statistical methodology used in these two surveys, see the technical note. Here is the Household Survey data. The unemployment rate declined by 1.4 percentage points to 13.3% in May, and the number of unemployed persons fell by 2.1 million to 21 million, reflecting the effects of the coronavirus pandemic and efforts to contain it. The unemployment rate and the number of unemployed persons are up by 9.8 percentage points and 15.2 million, respectively, since February. Among the major worker groups, the unemployment rates declined in May for adult men, 11.6%, adult women, 13.9%, whites, 12.4%, and Hispanics, 17.6%. The jobless rates for teenagers rest at 29.9%, blacks at 16.8%, and Asians at 15% showed little change over the month. The number of unemployed persons who were on temporary layoff decreased by 2.7 million in May to 15.3 million, following a sharp increase of 16.2 million in April. Among those not on temporary layoff, the number of permanent job losers continued to rise, increasing by 295,000 in May to 2.3 million. Now, it's no surprise, the further along we go into any type of reopening, it stands to reason that any type of layoff, furlough, whatever, is permanent, as opposed to temporary. But we will keep you posted on this. In May, the number of unemployed persons who were jobless less than 5 weeks decreased by 10.4 million to 3.9 million. These individuals made up 18.5% of the unemployed. The number of unemployed persons who were jobless 5 to 14 weeks rose by 7.8 million to 14.8 million, accounting for about 70.8% of the unemployed. The number of long-term unemployed, those jobless for 27 weeks or more, at 1.2 million, increased by 225,000 over the month and represented 5.6% of the unemployed. The labor force participation rate increased by 0.6 percentage points in May to 60.8%, following a decrease of 2.5 percentage points in the month of April. Total employment, as measured by the Household Survey, rose by 3.8 million in May to 137.2 million, following a large decline in the month of April. After an 8.7 percentage point decline in April, the employment population ratio rose by 1.5 percentage points to 52.8% in May. In May, the number of persons who usually work full-time increased by 2.2 million to 116.5 million, and the number who usually work part-time rose by 1.6 million to 20.7 million. Part-time workers accounted for about 2/5 of the over-the-month employment growth, so about 40% part-time workers. The number of persons employed part-time for economic reasons at 10.6 million changed little in May, but is up by 6.3 million since February, so lasting effects, no surprise. These individuals who would have preferred full-time employment were working part-time because their hours had been reduced or they were unable to find full-time jobs. This group includes persons who usually work full-time and persons who usually work part-time. The number of persons not in the labor force who currently want a job at 9 million declined by 954,000 in the month of May, after increasing by 4.4 million in the month of April. These individuals were not counted as unemployed because they were not actively looking for work during the last 4 weeks or were unavailable to take a job. Persons marginally attached to the labor force, a subset of persons not in the labor force who currently want a job, numbered 2.4 million in May, little different from the prior month. These individuals were not in the labor force, wanted and were available for work, and had looked for a job sometime in the prior 12 months, but had not looked for work in the 4 weeks preceding the survey. Discouraged workers, a subset of the marginally attached who believed that no jobs were available for them, numbered 662,000 in May, also little change from the previous month. Remember, we covered this with U6, all of these marginally attached, yada, yada, yada. Over 20%, which gives the better picture. Now on to the establishment survey data. Again, some of this becomes redundant, but it is a different breakdown. Total non-farm payroll employment increased by 2.5 million in May, reflecting a limited resumption of economic activity that had been curtailed due to the coronavirus pandemic and efforts to contain it. Employment fell by 1.4 million and 20.7 million, respectively, in March and April. Despite the over-the-month increase, non-farm employment in May was 13% below its February level. Large employment increases occurred in May in leisure and hospitality, construction, education, and health services, and retail trade. Government employment continued to decline sharply. In May, employment in leisure and hospitality increased by 1.2 million, following losses of 7.5 million in April and 743,000 in the month of March. Over the month, employment in food, services, and drinking places rose by 1.4 million, accounting for about half of the gain in total non-farm employment. So right there, over the month, employment in food, services, and drinking places, your restaurants, your bars, rose by 1.4 million, accounting for about half of the gain in total non-farm employment. So happy these people, of course, got back to work, if they're really working, and we'll get to that. But you also have to look at the quality of the job, what are these people getting paid, that type of thing. You have to look at the whole picture. Excuse me. May's gain in food services and drinking places followed steep declines in April and March, a combined loss of 6.1 million. In contrast, employment in the accommodation industry fell in May, losing 148,000, and has declined by 1.1 million since February. Construction employment increased by 464,000 in May, gaining back almost half of April's decline of a minus 995,000. Much of the gain occurred in specialty trade contractors, an increase of 325,000, with growth about equally split between the residential and non-residential components. Job gains also occurred in construction of buildings, a gain of 105,000, largely in residential building. Employment increased by 424,000 in education and health services in May, after a decrease of 2.6 million in the month of April. Healthcare employment increased by 312,000 over the month, with gains in offices of dentists up 245,000, offices of other health practitioners up 73,000, and offices of physicians up 51,000. Elsewhere in healthcare, job losses continued in nursing and residential care facilities, losing 37,000, in hospitals, a decline of 27,000. Employment increased in the social assistance industry, gaining 78,000, reflecting increases in child daycare services, an increase of 44,000, and individual and family services up 29,000. Employment in private education rose by 33,000 over the month. In May, employment in retail trade rose by 368,000 after a loss of 2.3 million in April. Over the month, job gains occurred in clothing and clothing accessory stores, up 95,000, automobile dealers up 85,000, and general merchandise stores up 84,000. By contrast, job losses continued in electronics and appliance stores, losing 95,000, and in auto parts, accessories, and tire stores, losing 36,000. Employment increased in the other services industry in May, gaining 272,000. Following a decline of 1.3 million in the month of April. About two-thirds of the May increase occurred in personal and laundry services, up 182,000. People back to work in uniforms. There you have it. In May, manufacturing employment rose by 225,000, with gains about evenly split between the durable and non-durable goods components. In April, manufacturing employment declined by 1.3 million, with about two-thirds of the loss occurring in the durable goods component. Within durable goods, employment gains in May were led by motor vehicles and parts, up 28,000, fabricated metal products, up 25,000, and machinery, up 23,000. Within non-durable goods, job gains occurred in plastics and rubber products, gaining 30,000, and food manufacturing, gaining 25,000. Professional and business services added 127,000 jobs in the month of May after shedding 2.2 million jobs in April. Over the month, employment rose in services to buildings and dwellings, up 68,000, and temporary help services, up 39,000, while employment declined in management of companies and enterprises, losing 22,000. Financial activities added 33,000 jobs over the month, following a loss of 264,000 jobs in April. In May, employment gains occurred in real estate and rental and leasing, up 24,000, and in credit, intermediation, and related activities, up 7,000. Wholesale trade employment was up by 21,000 in the month of May, largely reflecting job gains in its non-durable goods components, up 13,000. In April, wholesale trade employment declined by 338,000. It's interesting to see how big of a change you have. It really is, because that April jobs report was historic, which is why we read it in its entirety, and this is why we're reading this one in its entirety too, because this is history in the making. It really is. In May, employment continued to decline in government, losing 585,000 following a drop of 963,000 in the month of April. Employment in local government was down by 487,000 in May. Local government education accounted for almost two-thirds of the decrease, losing 310,000, reflecting school closures. Employment also continued to decline in state government, losing 84,000, particularly in state education, losing 63,000. Employment in information fell by 38,000 in May, following a decline of 272,000 in April. Mining continued to lose jobs in May, down 20,000, with most of the decline occurring in the support activities for mining, down 16,000. Mining employment has declined by 77,000 over the past 3 months. Employment in transportation and warehousing decreased in May by 19,000 after an April decline of 553,000. Air transportation lost 50,000 jobs over the month, following a loss of 79,000 jobs in April. In May, employment rose by 12,000 in couriers and messengers and 10,000 in transit and ground passenger transportation. So the airlines continue, air transportation continues to shed jobs. Despite the fact they got bailed out to $50 billion, they're still shedding jobs. In May, average hourly earnings for all employees on private non-farm payrolls fell by 29 cents to $29.75, following a gain of $1.35 in April. Average hourly earnings of private sector production and non-supervisory employees decreased by 14 cents to $25 even in the month of May. The decreases in average hourly earnings largely reflect job gains among lower-paid workers, which we discussed at length during last month's jobs report. This change put downward pressure on the average hourly earnings estimate. The average work week for all employees on private non-farm payrolls increased by a half an hour to 34.7 hours in May. In manufacturing, the work week rose by 0.8 hours to 38.9 hours, and overtime increased by a third of an hour to 2.4 hours. The average work week for production and non-supervisory employees on private non-farm payrolls increased by 0.6 hours to 31.4 hours. While employees in most industries saw an increase in their work weeks in May, the employment changes, especially in industries with shorter work weeks, complicate monthly comparisons of the average weekly hourly hours estimates. The change in total non-farm payroll employment for March was revised down by 492,000 from a negative 881,000 to a negative 1.4 million. So even worse. And the change for April was revised down by 150,000 from negative 20.5 million to negative 20.7 million. So again, even worse. With these revisions, employment in March and April combined was 642,000 lower than previously reported. Monthly revisions result from additional reports received from businesses and government agencies since the last published estimates and from the recalculation of seasonal factors. A methodological change to the establishment survey's birth-death model contributed to the revision for March. For more information, see the box note at the end of the news release. After revisions, job losses have averaged 6.5 million per month over the past 3 months. The employment situation for June is scheduled to be released on Thursday, July 2nd, 2020. Now, here's your little note that the Bureau of Labor Statistics, BLS, puts into the report. But you got to read all that stuff to get to it. Now, of course, you could just scroll to the end, but it's not at the beginning. It's not a warning. It's not, hey, it's not a little asterisk at the top. Yeah, here's this, that, and the other. But let's start with this. Let's put everybody on the same page, and then we'll go through all of the numbers. Nope, they wait till the end. So again, I'm just going to read this whole thing so this audience understands this. Coronavirus COVID-19 impact on May 2020 establishment and household survey data. Data collection for both surveys was affected by the coronavirus COVID-19 pandemic. In the establishment survey, approximately 1/5 of the data is collected at 4 regional data collection centers. Although these centers were closed, about 3/4 of the interviewers at these centers worked remotely to collect data by telephone. Additionally, BLS encouraged businesses to report electronically. The collection rate for the establishment survey in May was 69%, slightly lower than collection rates prior to the pandemic. The household survey is generally collected through in-person and telephone interviews, but personal interviews were not conducted for the safety of the interviewers and respondents. The household survey response rate came in at 67%, was about 15 percentage points lower than in months prior to the pandemic. That's huge. That's huge, folks. The household survey response rate at 67% was about 15 percentage points lower than in months prior to the pandemic. That's a big one. In the establishment survey, workers who are paid by their employer for all or any part of the pay period, including the 12th of the month, are counted as employed, even if they were not actually at their jobs. Workers who are temporarily or permanently absent from their jobs and are not being paid are not counted as employed, even if they are continuing to receive benefits. The estimation methods used in the establishment survey were the same for May as they were for April. However, after further research, BLS extended the modifications that were made to the April birth-death model back to March, which accounted for a portion of the revisions to March data. In the household survey, individuals are classified as employed, unemployed, or not in the labor force based on their answers to a series of questions about their activities during the survey reference week, May 10th through May 16th. Workers who indicate they were not working during the entire survey reference week and expect to be recalled to their jobs should be classified as unemployed on temporary layoff. In May, a large number of persons were classified as unemployed on temporary layoff. However, there was also a large number of workers who were classified as employed but absent from work. As was the case in March and April, household survey interviewers were instructed to classify employed persons absent from work due to coronavirus-related business closures as unemployed on temporary layoff. However, here's another however, it is apparent that not all such workers were so classified. BLS and the Census Bureau are investigating why this misclassification error continues to occur and are taking additional steps to address the issue. My, oh my, doesn't everybody feel better that the BLS and the Census Bureau, both agencies within the broader Department of Commerce, who is headed by Wilbur Ross? You think Sleepy Joe Biden needs to go home to Delaware and take a nap? Get a load of this guy. Look up Wilbur Ross. See who he's connected to. They're right on it, folks. Continuing, if the workers who were recorded as employed but absent from work due to, quote, other reasons, end quote, over and above the number absent for other reasons in a typical May, had been classified as unemployed on temporary layoff, the overall unemployment rate would have been about 3 percentage points higher than reported on a not seasonally adjusted basis. However, according to usual practice, the data from the household survey are accepted as recorded to maintain data integrity. No ad hoc actions are taken to reclassify survey responses. No, because they don't want to look political. We have miscalculations. We don't know why, but we're investigating it. But we don't want to look political. So we're going to tell you 2.5 million jobs were added in the month of May. But really, if you really dug into it, the unemployment rate should be 3 percentage points higher than what they're telling us. They're telling us it's 13.3%. That means it should be 16.3, which means unemployment would have went up because last month it was 14.7. Can't make this stuff up, folks. Can't make this stuff up. And of course, Thunder Thumbs couldn't have been happier. Jobs all over the place. Twitter. I think I wasn't home much of the day. I believe he gave a press conference or whatever you want to call it where he babbled and rambled like he does for an hour or so. I can only imagine what he said. I'm going to have to listen, although I don't want to. Months ago, I told this audience, at points, I have felt compelled to respond to the man, the President Thunder Thumbs, via Twitter, because I couldn't take it anymore. Well, I've had that feeling since then, but I've been more disciplined and I haven't responded to him months. Today, I couldn't take it because of this report and the baloney that he's spewing out there on Twitter and whatever he told everybody on camera today. And of course, the financial mainstream media, they're all pump and dump con artists too. I mean, are these people not reading the full report? Are you really surprised? I mean, we told you here at the Capital News months ago that this was going to happen. These types of discrepancies were going to happen because you have the payment protection plan, that program. It's a contingency. If you want to get a loan and you want it to turn into a grant, meaning it's forgiven, you got to keep people on payroll. If you laid them off, you got to get them back, Jack. Well, we're seeing that. We're also seeing a reopening of the economy, so that's not a surprise. I told you these numbers were going to be skewed. The government doesn't want to have terrible unemployment headline figures. And I stress the word headline. Donald Trump never misses an opportunity. All sizzle, no steak. All hat, no cattle. If you haven't waken up to this, you're not going to. I don't know what else you need to see. Jumps at it every opportunity he can. Opportunity to sell the sizzle, he's going to do it. No ifs, ands, or buts about it. I want people to come back to work. I want the economy to thrive. But there's too much junk, there's too much waste, and nobody's talking about it. $26 trillion nearly and counting, a $4 trillion deficit, and that'll be higher by the end of this fiscal year, which will come to a conclusion at the end of September. Nobody cares. Quarter of Americans skipping meals, going to food banks, NASDAQ making all-time highs. Does that make sense to you? It doesn't. So I had to respond to Thunder Thumps because I couldn't take it anymore. Not that he's reading them. Not that I really care. But I have to say, you use lies, you use damn lies, and you use statistics, to paraphrase a Mark Twain quote. And I said, for those of you interested in the actual jobs report, read it. And read the fine print at the end. Because this is ridiculous. This is not leadership. And of course, he threw Larry Kudlow out there and everybody else got to sell this. That's all they're doing. It's a con job. By definition. This isn't the data. It's all skewed. We can't make heads or tails of it, and that's what makes it even worse. And of course, for how many consecutive Thursdays has the stock market rallied on worse than expected initial jobless claims? 3 million, 4 million, 5, 6, almost 7 million. Oh, let's rally. And then you would think, okay, well, if that's the logic of the market, well, if we got a beat, if something was actually better than anticipated, like this one was, at least on the headline, wouldn't you think the markets would sell off? Because that's all they're going off of is headlines. Or did the market actually read the bottom and they said, oh, this is actually a crappy report. It's really not that great. Unemployment's actually higher, so that means Jay Powell's going to print more money. Can't make heads or tails of it, ladies and gentlemen. And I'm going to have to listen to that presidential babble, whatever the hell he does, because somebody on Twitter who I don't follow, so I'm not going to count them as a reputable person, and they used the word literally in their tweet, and people misuse that word all the time. But the gist of it anyway, and of course, if you've listened to this, then you're going to know if this is true or not, but I'll look this up. During his ramble, he brought up the name George Floyd. Yes, the same man who was killed by Minneapolis police a week ago. He said George Floyd would be happy with this report or what's going on in this country. I'm going to have to look at the context of how he used it. If that's even true, it just doesn't make any sense to me whatsoever. You want to point out the gaffes of Joe Biden, be my guest. He's a joke too. But this is not leadership. This is not somebody you look up to. This is not Abraham Lincoln, even though he likes to compare himself to Abraham Lincoln. I don't know how. You have to be a narcissist to even think about that. George Washington, Thomas Jefferson, John Adams. Nope. I mean, come on. Come on. I personally, like I said, I'm not voting this election. I gave the guy a chance. I voted for him. I admit it. Gave him a chance. There was no way I was voting for Hillary Clinton. Give it a shot. It's not going to be easy. I defended him on many occasions, on record, and I still stand by that. If it's justified, it's justified. I give him credit where credit's due, even now, even though I don't care for him. And he is the President of the United States. I want the country to succeed. But this is not leadership. Not even close. And I would like to know if the president read the fine print, or if he was informed of the fine print. Or did he just go out there and spew it? So, because if he knew, then he clearly lied and knew about it. And he was just trying to sell the sizzle, not the steak. And if he didn't know, then he's ignorant and incompetent. Choose your poison. Neither is good, and as far as I'm concerned, neither is acceptable. And that is not draining the swamp. That's the same juice. That's the same game. And of course, you could go to Thunder Thumb's Twitter account, and you could go to the archives, and you could see all his tweets and statements about the numbers being cooked, numbers being rigged, can't be trusted, yada, yada, yada. But now he's there. Oh, best jobs numbers ever. Best ever. Jobs, jobs, jobs. I wish I was making this stuff up. But I got to do it. That's what we're talking about. $20 a crime, 20 trillion ain't. 26 trillion now. It's a joke. But it's the weekend, so have yourself a good time. You'll catch me here next week. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.